Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I'm Ryan McQueeney, as always, an associate stock strategist.
Surprise!
If you listen every week and don't know that by now, that's messed up, man. And I'm also, as always, joined by one of our editors, Maddy Johnson.
Hello. I guess last week we mixed it up, though.
Right, that's
the
true.
last 2 weeks.
3 weeks, actually, because
3 weeks.
before that, I was gone. So this is the first time in a while we've had the regular,
It's true.
regular
Okay.
roster in here.
Well, anyways, back to the grind, back on the grind. Today is Friday, July 20th. We're here to recap this week's biggest stories in the investment and financial world. It's earnings season again, guys. It's really starting to pour in this week, and as per usual, we will be serving as your one-stop shop for the top market moving results over the next few weeks.
And with that said, we also have a couple non-earnings related headlines that made waves this week. And to kick that off, Maddy is going to start with the latest and perhaps final twist in the ongoing Disney, Comcast, Fox saga.
Though I guess you never know what Bob Iger has up his Mickey Mouse sleeve.
Yes.
But Comcast said on Thursday that it won't outbid Disney's whopping $71.3 billion cash and stock offer for certain 21st Century Fox assets. As a reminder, the assets at stake include Fox's film and TV studios, cable networks such as FX, a controlling stake in Hulu, which is home to my favorite TV show right now, The Handmaid's Tale. It's great. Watch it if you don't already. And international properties, including Star India. So Comcast will now shift its attention to European pay TV giant Sky PLC, which Fox currently owns 39% of. Last week, the cable and internet giant outbid Fox in its pursuit of complete control in Sky. Disney is, of course, interested in Fox's potential response bid for Sky. In an SEC filing last Friday, Disney explained that Fox, quote, may elect not to increase the price offered by it in the Sky acquisition and any increase in the debt financing, unquote. But that would require Disney's consent, and Disney might not provide such consent. Sky was founded by Rupert Murdoch and is based in the UK. The company is Europe's biggest leading media company and largest pay TV broadcaster. I know when I was over in London a few years ago, I mean, that's how I watched news. That's how I got my news whenever I was out and about in my dorm room. So, yeah, it's like the big thing over there.
Yeah, definitely. When I have to illegally stream soccer games,
nice.
I try to get my Sky Sports feed if possible. So, yeah, Disney basically saying last week, if you want to get in that bidding war, you better ask us first. And it looks like, Disney done with one bidding war with Comcast, and now we're going to be tangentially connected to this other one. So that'll be another interesting battle to watch. One question I want to bring up here, it's a talking point I haven't seen too much of, and I'm interested in hearing maybe if you agree with me here. Comcast, they run up the price for Fox on Disney and then back out of it. And if we remember a few weeks ago when we were talking about Comcast's new bid, they were saying, like, we're going to have to, get some private equity in here. We need a little bit of a capital raise if we want to afford this. So they run up the price tag on this deal, and a deal that they couldn't afford in the first place. So my question is, did Disney get punked here? And did Comcast just start this bidding war
to
make Disney pay a higher price for this? Maybe to fend off rivals in hunts for other assets such as Sky.
It sounds kind of plausible when you put it that way.
I mean, would a large corporation do something so petty? Never. I can't imagine. But no, I do think these types of things happen where they happen across, the sports world, certainly, where you go, oh, you want that asset, you want that contract, you're gonna have to pay a little bit more because I just gave them an offer. I can't afford it either, but now you're gonna have to outbid me. So
right.
So that's interesting. Maybe Comcast just dunked on Disney a little bit with that. So
we need Ashton Kutcher in here.
Ashton Kutcher comes flying out. Oh, okay. So moving on, the other non-earnings related headline we are covering this week has to do with Alphabet Inc., the Google parent, and its new legal woes in Europe. Alphabet was hit by a record-breaking $5 billion fine by EU regulators this week. This is an antitrust fine and one of the largest penalties ever assessed against a U.S. company. We obviously remember, and we covered it on this show, Google's previous fine from the EU. That was to the tune of about $2.8 billion, and that had to do with the company's unfair favoring of its own Google services. If I remember correctly, specifically to do with like favoring Google Marketplace stuff over other things in search results, and then not being explicit about the fact that their services were favored.
Yeah, that's about right.
This $5 billion fine, almost twice as much as that one, has to do with abusing Android and its market dominance in the mobile operating industry in 3 different ways. So the EU not happy that Google bundled its search engine and Chrome apps into the Android operating system, blocked phone makers from creating devices that could run forked versions of Android, and paid manufacturers to bundle the Google search app on handsets. The European Commission not liking any of those 3 things, not happy with Google.
I just don't think they like Google.
Well, yeah, I guess not. So,
But like, do they use Bing?
yeah, I don't know. I mean,
Like-
you don't want to use Bing, certainly.
No offense
If
to
they're thinking about it.
Microsoft's search engine, but
If they're thinking about it, they shouldn't. But yeah, the EU regulators now want Google to put an end to this illegal conduct within 90 days of this decision. Of course, as these things go, Google plans to appeal the decision, kind of reaffirming their belief in Android being this choice for everyone. Android is an open source operating system, so they like to tout it as this like it's the mobile operating system for the people. Which, I think the European Union clearly disagrees with. But in the meantime, and this is something that could hypothetically go on for years, this appeal process. The other one, the previous fine, had been played out for a very long time as well. Either way, Google is going to have to deposit a fine as the process unfolds, which I find to be a very interesting thing. And then if they lose the appeal, the fine is chopped up and distributed amongst the EU member states. So everybody gets a little bit of the Google pie if they end up paying out. It's a very interesting process there. And with that, we'll put the lid on the non-earning stories. We'll transition to another tech company, another major tech company that reported earlier this week.
IBM.
Oh, that's the one.
Ooh, International Business Machine.
Mm-hmm.
So they reported earnings of $3.05 per share, which beat the Zacks consensus estimate of $3.03 per share. The company saw revenue figures of $20 billion, surpassing our consensus estimate of $19.62 billion, and revenues were up 4% year over year. So IBM maintained its financial guidance for fiscal 2018, which calls for non-GAAP diluted earnings per share of at least $13.80. Now, an interesting storyline to emerge from this was that most of the revenue surprise came from the company's mainframe unit. IBM is in the midst of a new sales cycle for these mainframes, and that apparently came out much better than expected. So to many, this was a bittersweet result. Mainframes are not the business IBM wants to tout right now. And instead, investors were hoping for outperformance from the firm's cloud computing, Watson AI, and security units. But lumped together, IBM labels these divisions as its quote-unquote strategic imperatives, a category which saw revenue of $10.5 billion in the quarter. The cloud business accounted for $4.7 billion in revenue, which is up 18% year over year.
So decent results, definitely from the key ones, but weird that the mainframe computing unit was the big surprise there. Because that's old school stuff.
Definitely old school.
Yeah, I love the continued promotion of Watson AI.
I just love the name Watson.
TV. Yeah, and they have these commercials, and it's just so compelling. It seems like a friend. All right, so we're going to move on here. One major tech report to the next, and that is, of course, Microsoft coming in after the bell on Thursday afternoon. Non-GAAP earnings of $1.13 per share outpaced the Zacks consensus estimate by 6 cents. Revenue was $30.1 billion. That was ahead of our consensus estimate by about almost $1 million. Our consensus estimate was calling for $29.2 billion in revenue. That revenue total also marked year-over-year growth of 17%. Looking at several of the key business units, we were looking for revenue of 9.01 in the Intelligent Cloud unit. The actuals came in well ahead of that. Revenue for the IC business was $9.6 billion in the quarter. That's up 23% year over year. It looked like the Azure unit, Azure, however you want to pronounce it. I'm sure someone who works in cloud computing tech is rolling their eyes at me for my inability to pronounce it. But revenue growth of 89% in that ever important public cloud business. Looking at more personal computing, revenue was $10.8 billion in the quarter. That was up 17%, edged out our consensus estimate of $10.44 billion. And then wrapping things up here with the productivity and business processes unit, totaled $9.7 billion in revenue in the quarter. That edged out our consensus estimate of $9.685 billion. But if you were to round up that estimate, basically in line with the totals, that was up 13% year over year. Couple of key things within that unit. Office 365, Office 365, the new cloud-based Office version product. On the commercial side, saw a revenue growth of 38% in that unit. Overall, Office commercial products and cloud services revenue were up 10%. Then LinkedIn revenue coming in 37% higher year over year. So good growth from that investment. Now, seems like Microsoft has owned LinkedIn forever, but it's not been
2 years.
Yeah, if that even, right? So
I guess less than when the deal actually closed.
Yeah, and I don't know if we know for sure whether that has paid for itself yet. I highly doubt it's paid for itself yet, but definitely interesting to see nearly 40% revenue growth. IBM or Microsoft, that is, putting the pedal to the metal on LinkedIn and wanting to cash in. And I will shout out real quick because I'll be on the upcoming episode of Mind Over Money with Zach strategist Kevin Cook talking about gaming. We saw gaming revenue increase 39% from Microsoft this quarter, and they're citing Xbox software and service revenue growth of 36% in the quarter. So video gaming very much alive and healthy, and investors should, of course, be aware of that. But I think that does it for us here on the Friday finish line. Going to be very busy here the next few weeks with earnings results. So,
as always.
Yeah, definitely. It feels like right when we finish one earnings season, we're starting the next. So, but if you want to hear us talk about a specific earnings report or give our thoughts on some results or cover any story in the investment and financial world, feel free to shoot us an email at podcast@zacks.com. You can also check out all of our other exclusive audio content at zacks.com/podcast, including that Mind Over Money episode I'll be on soon. Then remember to subscribe and leave us a rating on Apple Podcasts. We're also now available on Spotify or wherever you prefer to get your podcasting. Thanks again for joining us. We will see you next time on the Zacks Friday Finish Line.